Okay, ma'am. So, hi attendees. I am Neelam Trusty from LawSikho. Now, today we will be discussing on a topic that is local content and registration requirement for binding in tender and restriction on the import. So today we have two speakers with us. They are Medha Chhabra, who is the senior manager in Godrej company. We are all aware of this, the famous company from our childhood. She's the senior manager in the legal department. And here is Richa Agrawal, who is assistant manager in the same Godrej company. So we welcome you both. Medha Chhabra is BA LLB honors from Symbiosis Pune, whereas Richa Agrawal is BA LLB honors from KIT School of Law from Odisha. So we welcome both of you to this webinar to speak and to enlighten us and all the attendees. And to the attendees, we also welcome you all to this webinar. And I request you to introduce yourself in the chat so that we will know who are here in the chat. Okay. So you can start.
Hi, good evening, everyone. Today on this webinar, I am there with my colleague Richa.
Hello, everyone.
So without further delay, we are going to just start off with our presentation. Yeah. We are going to speak about the local content and registration requirement, which has been put up recently by government for participation in government tenders. Along with that, we are going to speak about certain product bans which have recently been imposed by Government of India. We've divided the webinar session into three major categories. First, we'll speak about local content, then about registration requirement for foreign neighbors, and then the notification on bans. So first of all, let's start with the local content requirement. So this concept of local content, it has come up recently under the public procurement policy. This public procurement policy, better known as Make in India policy, this came about in 2017. The whole concept behind this policy was to encourage Make in India and promote indigenous manufacturing and production of goods. So government came up with this public procurement policy wherein when government is procuring products from suppliers, they would give preference to the products which are being made in India, which are manufactured in India. So the policy, along with the second part of the webinar, where we are talking about registration requirements of foreign entities, is only in relation to government tenders where a company or an entity is participating in government tenders. So like I mentioned, this came about in 2017, but there has been certain recent amendments in the same in 2020. As a part of Atmanirbhar Bharat Abhiyan, and certain major changes have been brought in through this policy. Now, one of the major change which has come up is in relation to local content, and we'll move on to the same and explain you what it is. So before I could tell you what changes came about, it would be best if I could run you through the 2017 policy. It would take 2 minutes and you'll be able to appreciate the 2020 changes better. So in the 2017 policy, government tenders were divided into two categories, 50 lakh, less than 50 lakh and more than 50 lakh. The less than 50 lakh tenders, they were reserved only for local suppliers. And more than 50 lakh tenders, anyone could participate, be it a local supplier or a foreign supplier. But there was no categorization of local suppliers further. So as you can see on the slide, the red part is something which has been amended in entirety, while the black part is still a part of 2020 policy. So I'll just explain you what was there in the 2017 policy that has been taken forward in 2020 policy as well. One of them is minimum local content requirement, which was laid down as 50%. We'll discuss this in detail, what is local content and what is the local content requirement. There's another concept of purchase preference margin of 20%. This also we're going to discuss in details. Another important aspect is the powers of nodal ministry. So nodal ministry is basically a ministry which is involved in the procurement of particular products. For example, if government has to procure solar panels, so nodal ministry would be Ministry of Power. If government wants to procure missiles, the nodal ministry would be Ministry of Defense. Similarly, so on and so forth. Now, nodal ministries have certain powers. For example, they have a power to increase or decrease the local content requirement, which is laid down as 50%. They also have a power to exempt certain products in totality based on the their availability and the local availability of local competition and quality of the product. Also, nodal ministry has a power to reduce the purchase preference margin from 20%. So let's jump on to 2020 policy and discuss all these concepts in details. So 2020 policy, one major change which we saw is classification of local supplier into class 1, class 2 and non-local suppliers. A class 1 local supplier is the one which has a local content of more than 50%. While a class 2 is where the local content is varying between 20 to 50%, and a non-local supplier is where the local content is less than 20%. So this classification has come up for the first time. Now, what is the relevance of this classification? And here I'm coming to eligibility of procurement of goods and services. So initially, I'll just step back. The 2017 policy talked about classification of government tenders into less than 50 lakhs and more than 50 lakhs. Now, with the new revised classification of suppliers, they've laid down a concept wherein they said that if there is sufficient local capacity and competition, government can say that wherever any product is available locally and local competition is sufficient, only class 1 suppliers will be eligible to participate. Means when the supplier is supplying the product, the local content has to be more than 50%. This implies that they are technically reserving a particular category of products just for class 1 suppliers to participate, which was not there in the previous 2017 policy. Now, coming to the point where sufficient local capacity and local competition is not available, which means the products not available in India in sufficient quantities or in quality. There they have classified the tenders into less than 200 crores and more than 200 crores. A big jump from 50 lakhs again. Where it is less than 200 crores, class 1 and class 2 can participate, which means non-local suppliers supplying less than 20% of the local content cannot participate. While when the tender is more than 200 crores, it is considered as a global tender and all the categories of suppliers can participate. So if I have to sum up this slide, I could just say that there's a huge shift towards giving preference to local suppliers, especially the class 1 suppliers, which means your local content has to be more than 50% to participate in certain tenders and to be given preference in certain tenders. Now, to substantiate this further, they had given a purchase preference clause, which was also there in the previous 2017 policy, but in a very different form. So purchase preference. Just to give a background of how when a bidder participates in a government tender, first there is a technical qualification criteria which all the bidders have to fulfill. There is financial qualification criteria which bidders have to fulfill. So once all the bidders who have fulfilled the technical criteria and financial criteria, they're shortlisted. And then the bids are opened, the price bids are opened, and the one which has the bidder who has bidded the lowest is called L1, and that bidder is usually granted the bid unless there's some technical problem, that bid has been withdrawn, the bidder is disqualified on some other ground. So this L1 bidder, if this L1 bidder means the lowest bid is from a class 1 supplier, he'll be awarded a full contract. But if L1 is not a class 1 supplier and bid is divisible, then 50% of the bid would be awarded to the L1, who's a non-class 1 supplier, and 50% of the bid would be awarded to the lowest amongst the class 1 suppliers, provided they are falling within the purchase preference margin. This would mean that, okay, the purchase preference margin is 20%. So for example, L1 has bid at ₹100. Now, and he's not a class 1 supplier. There's a class 1 supplier who has bidded at ₹118. Now, considering 20% purchase preference margin, it would come to ₹120. So government would ask this class 1 supplier who has bidded up to ₹120, which would mean this 118 guy, to match up to the price of L1. So this class 1 local supplier who has bid at 118 would be asked to match up to sell the product at ₹100, and if he is ready to do so, 50% of the contract would be awarded to this guy. So similar thing would happen when the order is not divisible. But in this case, when the order is not divisible, the whole of the contract would be given to class 1 local supplier who will be able to meet the bid and falls within the purchase preference margin, which means even if L1's at 100 and not a class 1 supplier, the bid would be given to class 1 local supplier at 118 if he's ready to match up to L1. So, and if the the lowest of the class 1 supplier is not able to meet the bid, it would go to lowest of the second lowest in the class 1 supplier category. So this shows that even if they are not L1, they class 1 local suppliers are given a chance to meet the criteria and to fulfill and so that they are able to win the bid. So this is a huge tilt towards class 1 local suppliers and encouragement of Make in India. Moving on to next slide. Okay, so we spoke a lot about what is, there has to be local content of 50%. Class 1 supplier is someone who has more than 50% of the local content. So let's talk about local content. Local content is nothing but a value add in the product or service which you've done in India. So as you can see on my screen, there's I have taken an example of an EPC contract where I'll be performing I'll be giving goods, materials, and services jointly to a government company. So when I have to calculate my total cost, I will see, okay, I have put in raw material, I have put in, there's an equipment cost which I have incurred, then I have personnel and consultant cost which I have incurred, then construction fabrication cost, other service cost, all of that is totaled down. I pay, in addition to that, I do a markup on it or a profit on it, and then I submit my bid, right? That is the total price quoted by me. Now, if I have to now figure out what is my local content in this, what I'll do is I'll take the total cost of all the materials. Okay. I'll subtract the indirect taxes which I have, and I'll subtract the imported content in the product, value of the imported content, to reach out to local content value. Okay, let's take it, let's discuss this with the help of an example. I'm a milk chocolate, almond milk chocolate supplier to the government. So I have raw material, which is cocoa, milk, sugar, almond. Now I have manpower cost, I have manufacturing setup cost, which is my machinery cost. So out of these 4 raw materials, I have procured one of the raw materials, say almond, from California. So while I calculate the total cost, when I am calculating my domestic content requirement, I'll add up the total cost, subtract the local GST, subtract the cost of the almonds which I have gotten from outside, including any import duty I have paid, and I'll come to the domestic or local content value. Now, if I have to calculate the percentage, that is simple maths, domestic value by the total value into 100. I hope this made some sense. We can discuss it in more details during Q&A session. Also, I would like to highlight one point here. If during manufacture of this milk chocolate, I had say imported a technology from outside, say the technology I'm using to manufacture this product has been licensed to me through a US company, for example, or any other country. So that license fee would also be considered as imported content because it is the money is flowing outside, right? The license fee I'm paying to a US company, and the domestic content value would be after subtraction of that license fee. I am moving on to the next slide. Coming to the, verification of local content. So this is how we calculated local content. Now this local content is very critical because based on your local content percentage only, you'll be eligible for certain tenders, and you would be ineligible. You'll be given preference in certain tenders based on your local content requirement. So one thing is now this is something which is a 2020 rule where you have to give a certification for your local content. If your tender value is less than 10 crore, then you have to give a self-certification. If your tender value is more than 10 crore, then you have to give a certification through statutory auditors. Now, nodal ministries, nodal authorities, which we spoke about in the beginning, they have a power to anytime, conduct random audits and figure out whether the certification is correct or incorrect. Another thing is they lay down minimum percentage of local content. For example, Ministry of Power has laid down local content requirement for certain parts in solar panel as 80%, which is much higher than 50% standard local content requirement. For certain products, the local content requirement is even lesser than 50%. So this is the power which nodal authorities have. Then again, nodal authorities can actually exempt certain products in totality from the local content requirement, considering that, the technology is not available in India, the local manufacturing is not there. Also, nodal ministry can decide that only for these categories of products, only class 1 can participate. So considering this, nodal ministry has huge powers to, decide on the local content requirement. Moving on to the GEM portal, which is a government portal for online purchase. The notification currently states that you are required to put a local content your local content percentage in the product to the extent possible. So just to summarize this, one important key point is that local content is calculated product wise. So today I am supplying milk chocolates. I cannot say Medha and company supplying all the products have, is a class 1 local supplier. No, I might be a class 1 local supplier for milk chocolates, but I might not be class 1 local supplier for coffee. So technology I just mentioned, if you're paying a license fee, which is going outside India, it would be considered as an imported item. And while calculating local content, it is subtracted. Another point which I wanted to highlight here was I just mentioned in the beginning that, this is about government tenders and government is procuring, but it has a trickle down effect. Say Medha and company bagged a tender from government, and now I have to supply milk chocolates to government, right? Now I am procuring my raw material from a local vendor or any vendor. To justify my local content of 50%, I have to make sure my raw material is also within that local content requirement, right? So I have to make sure that the guy I'm buying from is also manufacturing the product in India. The raw material is from India. Alright, so that my overall local content requirement does not fall below the percentage which has been specified in the tender. So though I being a private entity, entering into a agreement with my supplier who's a private entity, I might still be contractually imposing a local content requirement on him, because ultimately his product is going to Government of India. So it has much wider impact than what is apparent on the face of it. Again, a common thing about this is that, if I want to increase my local content, I have to buy it from local manufacturers. I can do JVs with local partners instead of getting technology from outside. So that is one thing which we can keep in mind. Another thing is certification, the self-certification which we give for local content requirement. We'll have to take the same from our suppliers and sub-suppliers, based on which I'll be able to justify to government that my local content requirement is this. So this is it about the local content requirement. We can move on to the next topic and we'll take questions in the end if that is okay. Okay, I would like my colleague Richa to take over from here.
Thank you, Medha. So in these slides, we will see the registration qualification criteria that has recently come up. So Medha, if you can please go to the next slide. Before going into the registration requirement, let's see what's General Financial Rule 2017 are. So general financial rules are basically a compilation of all the rules and orders which are notified by the government from time to time. Now, these are basically the procedures or the restrictions that are levied by the government while utilizing the public finances. And this has to be followed by every department and organization under the government or any body which will be specified from time to time. Now, Rule 144 specifically lays down a very transparent policy which has to be followed while we are utilizing the funds for public procurement. So recently there has been an amendment and sub-rule 11 has been inserted in Rule 144. What does this rule talks about? It basically talks about the mandatory registration which has to be done with the competent authority in case the bidder is from a country which is sharing the land border with India. Now in the next slide, for the sake of convenience and a little to provide a little clarity, what we have done is we have defined the foreign neighbor who has to mandatorily register under these rules. So a foreign neighbor is basically a company, an entity from a country which shares a land border with India, or any subsidiary or an entity which is substantially controlled, or an entity whose beneficial owner is from such a country which shares land border with India, an Indian agent representing such country, or any member of the joint venture or consortium. To provide a little clarity, let's go ahead with examples. So let's say there is a company incorporated in China which wants to bid for a government tender of India. Now they will have to mandatorily register themselves. Let's say there is another company which is, although it is incorporated in India, but it's a subsidiary of a company which is in China, or a company which is incorporated in India but whose beneficial owner resides in China. So in these situations, the company has to mandatorily register themselves before going ahead and bidding for the tender. Also, there are examples where an Indian company incorporated in India and is not even a subsidiary of any of the Chinese company. However, what it does is it procures the material from China and then supply it to the customers. Now, in this case, if such company wants to participate in a tender, then they also have to mandatorily register themselves. In the next slide, we will see so basically, these provisions have laid down a lot of situations where you have to mandatorily register yourself. But to simplify it, we have divided it into scenarios. Now, let's say if an Indian company is participating individually, then the registration is not required. In case the Indian company is participating with a FN as described in the previous slide as a joint venture, then such joint venture has to register themselves in the competent authority. Now, an Indian company is participating in the tender. However, after winning for the tender, it intends to subcontract the work or the part of the work to a country which is which comes under the definition of FN. Then such subcontractor has to register themselves under the competent authority. Another scenario is, let's say an Indian company is bidding and it intends to procure the raw material only from such FN, then they need not register. If again, in such scenario, the company is only buying certain components or components for the products, then also it need not register itself. However, as described in the previous slide also, if an Indian company is procuring the entire finished good and then selling it, intends to sell it under the tender, then it has to register itself, as it will be covered under the definition of agent. In next, so now we have discussed all the scenarios where we have to register and we don't have to register. But where do we have to register? So this will be registered under a registration committee which shall be formed by Department for Promotion of Industry and Internal Trade. The committee does not just has to provide registration to the bidder, but it also has to seek political and security clearances from the Ministry of External Affairs and Ministry of Home Affairs. In case no such clearance is obtained, then the authority cannot go ahead and grant the registration. Also, the decision that will be made by the registration committee will be final. Also, under these rules, if any company is participating in any government tender, henceforth, they have to give a certificate now. In this certificate, they have to state that either they are a company incorporated in India, hence these rules are not applicable, or if they are from such a country which shares the land border with India, then they have already registered and they are in compliant with these rules. In case it is found that any such certificate is false or wrong information or misrepresentation is done, then accordingly the legal consequences will have to be faced. So in the next slide, what we have done is we have just given an example of model clause, how the certificate has to be given for a better understanding. So in this clause also, it can be seen that it is stated that either they are a bidder from a country either they are a bidder from India, or they are bidder from a country which shares land border with India, and hence they are registered to be in compliant with these rules. Now that we have discussed all the two notifications, one about the local content and second about the registration in tender, it has to be noted here that these two notifications has to be read in conjunction with each other. I will explain this with the help of an example. Let's say I am an Indian supplier and I am bidding for a tender. Now, because I am an Indian supplier, I am already in compliant with these rules. I will not have to register myself under any competent authority. I will just have to give a certificate stating that I am a company which is incorporated in India. Hence, these rules are not applicable. Secondly, let's say one of the technical requirement of this tender is that the local content of this has to be minimum 40%. However, despite of me being an Indian company, I am procuring raw material, let's say, which amounts to 60%. And then I am manufacturing my product. So even though if I am in compliant with the registration part, I am not in compliant with the local content part. Hence, these two regulations have to be read in conjunction with each other, and accordingly bidding for the tenders should be done. So this all is regarding the mandatory registration. I can see that we are getting queries, but I think we are left with one part of the presentation. After that, we can take all the queries together. So next topic, going to the next topic, which is notification pursuant to ban on imports on various products. So before I go to this topic, let's discuss a little bit about Bureau of Indian Standards. This is basically a national standard body which is formed under the BIS Act 2016. It lays down Indian standards and norms which a manufacturer has to follow. This is just to enhance the quality of the products. Now, also, while you are importing products from outside, you have to ensure that the products stick to the BIS standards as prescribed for products from time to time. Not only this, they only do not provide standards, but now it is also mandatory to get a license under them, and also under some notification, it has been stated that these products will also be tested in the laboratory, and then a certificate will be provided, and after that only these products can be imported further. So now we will see that what is the scenario of BIS standards in India. Recently, around 371 items are expected by March 2021, whose BIS standards will change. Now, what will happen if these BIS standards change? So, for example, let's say I am an ABC is an Indian company which is procuring its products from China. However, new BIS standards have come into place now. So these products have to be ensured that they stick to the BIS standards, they get a license, and then only such import from such Chinese supplier or any other supplier can be done. As you can see in the news article, BIS standard is there are products and industries which are mentioned in the news articles which will have new standards by March 2021. Also, recently in a news article, it was given that BIS is likely to be attached with Department of Commerce, as they have to now work closely with each other to change the standards and quality norms of imported products. Apart from this, these are the news article. Apart from this, there are already notifications on which has banned the import of certain products. One such is toys. So the DPIIT ministry, what they have done is they have changed the BIS standards of toys. Hence, the toys which were previously imported from China are now facing difficulty because the standards have been changed. Same way in the steel import, certain regulations have been done, and new standards and quality control for steel and certain products have been notified by the Ministry of Steel. Also, there has been direct ban of import on color television, and it has been moved from free to restricted. AC with refrigerant also have been amended from free to prohibited. Along with this, recently the Ministry of Defense has also taken out a negative list with 26 items. So basically these 26 items can now not be imported from anywhere. Also, it has been already announced that there are going to be some 101 items in a negative list which will not be allowed to be imported. Also, there has been a implementation of a new rule, which is Custom Rules 2020. It is basically to determine the country in which the product is manufactured versus the country of import. So if in any country the product has some value addition, then the country of origin changes accordingly. However, this is a very lengthy topic. These rules have recently come, and we would not like to ponder much into this, but this rule is very important because it helps us to determine the country of origin for the import. Now, we discussed about local content, we discussed about registration, we also discussed about few bans. So for clarity and also convenience, what we have done is we have made a chart of all the notifications that we have referred to, all the news article links that we keep reading, and which are going to affect either the import or the Indian market business scenario. So this is for your convenience. We will circulate the PPT, and you can all have a repository of all the notifications and links. So I think that's all from our side. Any questions? Now we can take them.
I can ask behalf of the attendees. Otherwise, I request attendees, if anyone want to ask a question, please raise your hand so that I can unmute. Here is Ranji Shastra.
So,
Who is asking, can I?
Neelam, you are not audible.
Neelam, you're not audible at all. So I can see Rajni's question. She's asking, can IP resident in India included in local content? Yes, Rajni, that is correct. That if you're while you're calculating the total cost of your goods, now it depends on how how have you allocated your IP cost in a product. For example, if I have a patent with me, I would allocate the cost of it over a period of 20 years. Why? If I have licensed the technology from a third party, I would allocate it based on, the license fee I am paying versus the number of products I am selling, maybe royalty based or something. So like every company does, they allocate a cost per product in that for that particular IP, right? So if it is an Indian IP, it would be a part of local content. If it is not, it would not be. Can only patent registration qualify for IP? No. So Rajni, one thing we have to understand here is that are you allocating any cost of that to the product you have manufactured is the question. So I'll just go back to the local content slide. Maybe I will be able to explain you there. 1 second. I'm sorry. Okay. So here, as you can see, in the other service cost or maybe in the equipment cost, I'll put another column for IP related cost. So if you have a patent, how do you plan to use it? And how do you allocate cost to it would determine how you're gonna say that it would contribute to your local content or not. But answering your question, if you're not transferring any license fee outside, and if you're paying license fee to another Indian entity, it would be considered as adding on to your domestic content or local content value. Does that answer your question? Should we move on to next one? So if it's an in-house IP, again, how would you allocate cost to it would depend on the, would you consider it as domestic content? So the answer to this question would be yes, it would be considered as domestic content. Like for example, if I'm making chocolates and the milk for that chocolates, the raw material for it is being generated by me in my own factory, that would contribute to local content. Similarly, an IP, which is your in-house IP, if it is being used in a product which is finally being sold, would considered as local content and would be used while calculating local content. Should we
Hello, ma'am.
move on? Yeah, hi.
Yeah. Sorry, my internet connection is unstable today. So there is another question. Both local content and GFR notification need to be read in conjunction. Attendee want you to elaborate on this aspect.
Yeah, sure. I think Rajni is still asking question in relation to technology agreement. See, if it is an in-house technology, you'll have to at least show that how are you accounting for it in your cost of manufacturing of product. If you'll discuss with your team, the finance team, they'll be, I'm sure when they have decided on the final cost of a product, they usually include any kind of patents and IPs that are being used for manufacture of that product. So that would be able to, you'll be able to see there in the cost of the product. And yes, if the patent is resting with the parent company, then you'll have to have an agreement. It will be much easier to prove that, you know, you've paid, say I'm paying a licensing fee to the parent company. Of course, it will be an arm's length transaction, so you have to use the market rate, and it will be very easy to prove that you've incurred this expenditure. So it is a cost to you in manufacturing the product, and hence it would increase your domestic content value. Now moving on to the next question, which Rajni had, which Neelam had just read out. For calculation of local content percentage, can you elaborate on aspects? Is this the same question? Yeah, it is. I'm sorry, I have missed out on your question, Rajni.
One query which has come. So the queries that you mentioned, that both local content and GFR notification needs to be read in conjunction. Can you elaborate on this aspect? Sure. So, we have discussed that GFR is all about if you are covered under the definition of FN, then you need to mandatorily register yourself with the competent authority. So this is what GFR is about. Now, local content is about maintaining the indigenous content in your products or your services. So I'll just explain this with the help of an example. Suppose I'm a company, ABC is a company which is incorporated in India, and it is not forming any joint venture, neither it is subcontracting any part of the tender to any such company. So it need not register itself, nor the subcontractor needs to register itself. So in this scenario, they can give a certificate stating that they are in compliance with the rules of GFR. However, let's say that one of the technical requirement of the tender bid was that the local content has to be a minimum 40%. However, such Indian company, which is ABC, although it is in compliant with the GFR rules, its local content is not 40%, because the cost of the raw materials which it is acquiring from outside comprises of 60% of the product. Hence, even though it has registered itself, it isn't compliant with the first part. Because it will not be in compliant with the local content part, it cannot participate in the tender. I hope it is clear now.
Thank you, ma'am. I hope it is clear to the attendee who have asked the question. Okay. Ma'am, anything you want to add in this? Hello? You are muted.
Any further questions we'll be happy to take.
Okay, someone want to ask something.
Okay, it's fine. Then, Richa, do you want to give another example of Indian company procuring components and subcomponents versus Indian company who's acting as an agent for another company?
Yeah, sure. Just to simplify it, let's say ABC is a company which manufactures AC, and I am importing 3 parts of the AC from any such country, and then bringing it to India and assembling it, making the product, and then giving it to the government. Now, here I am only procuring components or components of my main product. Hence, the registration is not required. However, let's say that I am procuring the entire product from a Chinese company. Let's say I'm procuring the entire machine which has to be given to the customer, and then I am supplying it to them. Then here I am working as an agent for that company which is incorporated in China. Hence, the registration of this Indian company is required and it's mandatory. So this is the difference between components, subcomponents, and acquiring the entire product.
Any other questions?
Someone has, I think Ranji has email message that can you please email the presentation. So Ranji, what we will do is we will send this presentation to LawSikho, and I think Neelam, you can help circulating this PPT.
Sure, ma'am, sure.
Then we'll end the session now. Thank you, guys.
Okay, ma'am. Thank you so much, ma'am. Let me check the YouTube because we're live on YouTube too. If there is some relevant question, then I can take up.
Sure, sure. You guys have been a wonderful audience by keeping all quiet.
Okay, ma'am. Thank you so much.
There's a question from Abhishek. Is there a link for attendance and feedback? I think
no, ma'am. They should contact me, either me or any of the LawSikho, so that they can send them the details of the certificates and all.
Okay.
In the chat box, I am sending you the link of both Richa ma'am and Medha ma'am's LinkedIn profile and mine too, so that you can get in connection with us. If you have any doubt, you can talk to the speakers regarding any other thing you want to know about LawSikho, to talk to any other thing like the courses or webinars. You can get in touch with me or the certificates too. I am sending you the link of LawSikho pages for further webinars or career assessment tests, because they will help you.
Neelam, you're again not audible now.
Wait.
So please reach out to us if you have any questions in relation to this. We'll be able to help you guys. Thank you so much.
Thank you so much.
Thank you, Richa, and thank you, Neelam, for helping us out conducting this session.
Thank you.
Thank you, ma'am.
Am I audible?
Yeah. Wait a second, ma'am. I am sharing the details with. Okay, ma'am. Thank you all the attendees and both the speakers. I am glad to have you here. Sorry, my internet connection is going poor, so I'm unable to tell everything.
No problem. I think
No
internet's been bad for us also. Okay. It's fine.
Thank you, ma'am. Thank you.
Okay, thank you.
I'm ending the session. It was like quite insightful session to me, as well as the attendees. So thank you, ma'am.
Thank you so much. Okay.
Please reach out to us if you have any questions.
Yes, ma'am. Thank you.